Hello and welcome to the special segment called as MC Pro Select Stock of the Day. I'm your host Nikki Mirchandani, and in this segment, like always, we bring to you fundamentally strong investment stock ideas. Well, today we're talking about Axis Bank being the third largest private bank. Axis Bank requires minimal introduction out there. It's a pan-India player with an extensive network of around 4,945 domestic branches promoted by institution and efficiently managed by a team of professionals. The bank holds diversified assets book that adds to its strength and stability. Now, why go long on Axis Bank? A couple of reasons out there. The first one is the strong quarter performance. The first quarter of the current financial year has witnessed a consistent performance. The bank has reported profit which received boost from treasury gains, which counterbalance the impact of elevated operating expenses. As anticipated, there was a sequential decline in the interest margins, that is NIMs, by almost 12 basis points. This can be attributed to spread compression stemming from the fact that the cost of funds rose at a faster rate as compared to the yield on assets. Having said that, the bank expects the pace of rise in cost of funds to now slow down. In fact, MC Pro sees the bank deploying many of its available levers of margin improvement in the future. Another reason there is the OPEX remains elevated. However, the guidance has been maintained. Now, the bank saw a significant increase in the operating expenses, especially employee expenses, thanks to the full quarter impact of a city employee addition, annual increment, along with addition of people in growth, business and technology, amongst others. Since the quarterly impact of around 385 crore for city integration, total OPEX growth would have been lower by as much as 600 basis points for the bank. The bank is still targeting to bring down the OPEX to around 2% in the next couple of years without the Citibank impact. This will remain a key driver of ROA expansion going forward. Another one which adds to the list is the asset growth, which remains healthy at this point of time. The bank's advances growth at over 22% year-on-year has been aided by corporate, SME as well as retail. Since 77% of its retail assets are secured, there's a headroom to grow the high-yielding unsecured. Well, let's talk about another trigger, which is deposit growth, which still lags. However, the composition seems to be improving. In the recent period, there was a slight sequential decline in deposits, while advances experienced 1.6% growth. As a result, the credit to deposit ratio surged by nearly 200 basis points, sequentially exceeding 91%. It's worth noting, however, that the deposit quality is on upward trajectory with the low-cost CASA, that is current and saving account segment, demonstrating faster growth. This improvement is evident in the CASA share, which has increased by 180 basis points year-on-year to reach a number of around 45.5%. Given the intensely competitive market landscape, this area emerges as a critical focal point for strategic attention. Another reason out there is the asset quality, which remains stable. The gross slippage was a tad higher sequentially in Q1, thanks to higher recovery, upgradation, or write-offs. The absolute gross NPA was sequentially lower at the end of June 2023. The bank reported gross and net NPA levels at around 1.96% and 0.4% respectively, as against the number of 2.2% and 0.39% in the preceding quarter. Now, the bank has a decent provision cover of roughly 80%. This restructure book is minuscule, 21 basis points of the gross customer assets, and carries a provision of around 21%. Let's talk about the valuations. Well, the bank maintains a strong capital position with a capital adequacy ratio of around 17.74% and a common equity tier 1, that is CET1 ratio of around 14.3%. To enhance its performance, the bank is encouraged to gradually narrow the existing 20% valuation discount in comparison to that of its peers, particularly as its return ratio shows signs of improvement. According to MC Pro, the present phase of consolidation in the stock presents a favorable entry opportunity for the investor seeking to capitalize on the potential future gains of this bank. Well, with this, it's a wrap. Thank you so much for tuning in.